All right, so welcome to another video. Today, what we're going to do is we're going to go ahead and take a look at how much capital you need to make $10,000 a month when trading options. So keep in mind, a lot of people always ask me, can I make $5,000 a month? Can I make $2,000 a month? Can I make $12,000 a month? This oftentimes happens when I deal with coaching people. By the way, if you do want to get a coaching session, check out the Traders Fly website. You can also ask me some questions in our Discord area. If you just go in, that's kind of like a chat room. You can also ask some questions there. But in any case, I get a lot of questions, and I also see a lot of stuff going on asking how much money can I make with, by trading options. And it's a difficult question to answer because there's a lot of information that most people miss. And the information that most people miss is how much capital are we starting with? What duration are we talking about? So it's going to really vary depending on a few factors, how much money you can personally make when it comes to trading options. For example, if I trade shorter duration options, I can make much more money faster than trading longer, 30 days, 90 days options. So if you're trading 3 days, 1 day options, you can make way more money. Also, if your risk tolerance is greater, you're willing to risk and bet it all, you can make a lot more faster, but you'll probably also have greater drawdowns. So there's a lot of factors involved. Now, the same thing goes with, hey, if you want to make $5,000 a month, how much capital are you starting with? Are you starting with $1,000, or are you starting with $100,000 or $10 million? If you're talking about the $10 million account and you're trying to make $5,000, it's probably pretty easy. If you're talking about, hey, I've only got $9,000 in my account and I'm trying to make $5,000 a month, it's probably much more difficult to do something like that. But again, it all depends. What duration are we talking about? How aggressive are you going to be? And that kind of thing. And what kind of drawdowns can you handle? So now I wanted to give you a quick shout out from our sponsor. Before you make any trade, you can verify it with VectorVest. Their free stock analysis report tells you what a stock is really worth and how safe it is. And it even rates it whether you should be a buyer, seller, or hold the stock. So that way you can invest with confidence. If you're interested in VectorVest, check out the link in the description below, or visit the website vectorvest.com. So I'm going to show you a couple of different things. We're going to go ahead and just play with a few factors here as we go in and look at some trades. But I'll just give you some thoughts and tidbits of hey, this is what's possible. This is what you could do, can't do. This is kind of more realistic, and just give you some numbers that you can play with. And again, you have to make your own decisions and what's real for you, because I don't know what duration you're going to trade. I don't know the type of vehicles you're going to trade. If you're trading more volatile stocks, then you could actually make a lot more. So for example, stuff like GME at the current time, the implied volatility is much greater over here. And with that means you have inflated option premiums and you can make a lot more money that way. And then you can when you're trading something like, let's say, Bank of America, where you have a much lower implied volatility of only about, let's say, 35. So anyway, let's take a look at trying to make about 10 grand. And I'm just going to use something like Microsoft, and I'm going to go into the 30-day options as a baseline. We're just going to start it super simple as a baseline. We're going to do, we're going to try and go with 32-day options because we're looking at 10,000 a month. How many spreads is it going to take for me if I'm selling vertical puts to go ahead and make 10 grand a month off of Microsoft? So we're going to use the 30-day options. And let's say I go to something not too crazy safe, but somewhere relatively safe. I'm going to go into a delta of about 15, 18 right here. So we'll try to sell some of these spreads right here. So I'll go to 255. We'll sell a vertical. Okay. And then what we'll do is we'll go ahead and spread this out by about 10 points. And now I've got myself a risk profile picture. Now the green line is the line at expiration. The white line is today. Okay. And with time, I get a theta decay. And this is the capital. The max loss that I can have is right there. So that'll also tell me the capital that I'll be at use. So let's start this out and we'll take a look. So right now I'm trying to make about $135 on this. And if I go ahead and multiply this times 20, now I'm only going to make, let's say, $2,700. So it's going to take me a lot more capital. This is already 17 grand, a lot more capital to be able to hit 10 grand a month. And that's assuming I'm taking it to expiration. So now let's say if we make, you know, I mean, I guess I could do some math behind it, but let's just start increasing the contracts. So here I am at 50 contracts. Here I am at about 80 contracts. And there we go. So really what I need is about 74, call it 75 contracts to be able to make 10 grand on these selling put option spreads. And that is if that trade goes to expiration. Now, in order for me to make that happen, I need 64 grand, about 65 grand of capital to making it happen. So I got to put on a 65 grand and I got, you know, I might be able to make about 10 grand if I take it to expiration. Now, is that silly to do it all in one trade? Absolutely. You'd probably spread your risk around in different contracts. You'd put 5 contracts in Microsoft, 5 contracts in McDonald's, 5 here, 5 here, 5 here, 2 here, 2 here, 1 here. So you'd spread things around all over the place and not all at one strike. I'm just, again, playing with some numbers for you guys. So just bear with me here. So now, okay, what if I go ahead and actually sell some premium also on the call side? That will reduce the capital that I need to use, because right now I'm looking to use about 65 grand to try and make about 10 grand for that 30 days. So let's go ahead and convert this to maybe more of an iron condor. So I'll make a little bit of premium here on the upper end. So let's go to 305 and 315 and sell some of these contracts. Okay, so now we've got a 10 wide here, and I will sell some premium. Let's go to 40 contracts or so here. And now I can reduce the other contracts. Let's go to about 50 here. Okay. We'll go to about 40. Let's see, we got 40 and 40. Okay, so this one actually works out pretty well. Okay, so now I've got 40 contracts on the puts, and I've got 40 contracts on the calls. So 80 on verticals. So I got 40 on each side, 40 puts, 40 calls. So I got 80 total contracts, or in other words, or 80 total vertical spreads, or I've got a 40 iron condors. So now what I'm looking at here is about a 10 grand possible position, but that is assuming I take it to full expiration, which again is not really likely, but I do use a lot less capital. Remember in the other one it was about like 65 grand or so. In this case, I'm only using about 30 grand. And why is it less? It's because when you have a double spread, meaning like verticals on the right and verticals on the left, they only margin you on one end. So here, in this case, I'm using about 30 grand of capital. All right, so now we're using less capital and we're making them the same. So that's a good sign. The problem is usually this wouldn't go all the way to expiration. So instead, what you would do is probably go ahead and look at, you know, trying to make a little bit more. So maybe instead of 40 contracts, you go like 55 here and maybe 55 or like 60 here, and eventually you take it off. So you're aiming for like 15, 16 grand at expiration. So you might be able to get with like 8 or 9 or 10 grand. And in that case, you do need about 45 grand of capital to making it work. So now that we've seen a couple of examples here, what is this basically telling us? It's telling us that we need to churn or rotate about 50 grand worth of capital per month to making this viable. Now, if I go shorter duration, I can actually make more. Or if I do something a little more directional, I can actually make more. So let's watch what happens here. Let's say I go a little more directional and go to about 290 and 300 here. Sorry, 280 over here. So now I've got something a little more directional. Okay, so I'm using even less capital. And what you can see here is actually I could make 38 grand over here at the top. But again, chances are that's probably not going to happen. So I'm going to go ahead and get rid of this. But take a look. Take a look. I could go closer to being a little more directional. And when you're being a little more directional, you need less capital. So I could actually go in and start now going a little here and being a little more directional this way. Actually, I could switch it to the call side by now. So let's go to about a 305, 295. So now I've got about 14 grand at use. But look, the most I can make is over here, 46 grand. So I don't really need as much capital. But the problem here with doing a spread like this is I actually needed to move 10, 20 points. So that's where things are a little bit different. So now all of a sudden I need less capital, but I need movement in the stock. Now my trade is really concentrated on making much more from the delta side and not as much theta. In fact, the theta actually hurts me. So this is the trade-off here in stocks, is that as you go ahead and start moving your position and you make more money from the direction, then in that case, you actually can use less capital. So in here, I'm using 24 grand to make 36. So to make 10 grand, I actually need a lot less spreads. So let's go in and here's 6 grand. So I need to go ahead and there we go. About 18 spreads and using about $7,000 to be able to make that 10 grand if I get the direction right. But the problem here is if it does go against me, I lose money and I also lose every day about $43. That's what the negative theta is. So now if you are thinking, hey, well, I can add in direction to it, I actually need less capital to go ahead and make that 10 grand a month. So you can see how the formula of trying to make 10 grand a month is not really simple to answer. It really depends on the types of trades you're doing. Are you doing some directional? And now if we actually do some shorter term trades, let's just shorten it up a little bit more, you can actually do even less contracts here. There we go. You could do less contracts and risk even less. So I'm risking now 2 grand less to still make about that 10 grand. And that's just because the shorter duration options decay quicker. So if it moves in your favor faster and then this decays and expires, then you could actually churn 2 or 3 of these trades in 30 days. So let's say you did these trades, but you did 15 days, then you did another one 15 days. So you could be doing this 2 times. So you could make, 5 grand here, 5 grand here, or in other words, if you were doing 10 grand on each one, that would allow you to be at 20 grand a pop because you're doing shorter durations and you're cutting it out. If you did it every week, you could do 4 of these. So you're doing 10 grand, 10 grand, 10 grand. You could get into 40 grand, which in other words, then you actually are maybe making, 2 to 3 grand a week. And then you could go ahead and build up to your 10 grand per month. So again, depending on your duration, which the shorter the duration, the more price risk. And I wouldn't recommend it. With a larger account, you do want to spread your time frame out to longer durations. But I just want to show you, like, how do you play with these numbers is you're looking at different things. You're looking at what duration are we talking about? What strategy are we talking about? Is the volatility going to help us out? Is the direction or price movement going to help us out? Let's say we're doing something like a Tesla now. Well, what if I do now a calendar in Tesla and I go 30 days out? Well, let's say we go just slightly out of the money, okay, and I do a calendar right here. And I'm trying to make 10 grand on Tesla. How much capital is it going to require? Well, I'm getting a theta decay of about 10. Well, with calendars, it's a little more difficult because it depends when you close it out. So it's much more difficult to predict your 10 grand a month or your profit in a calendar, because if you start overshooting it, you have to take it off, or, you might close the trade a little earlier because, just the way that the time decay works, because it's based on the other option that you have. So if you're thinking it's going to only decay about this much, which will turn your curve into something like that. So you're kind of looking at, okay, how many days do I usually stay in a 30-day trade? So if you stay in till, let's say a week and a half or so, and it decays this much, well, now let's say it pulls back a bit or overshoots a bit. So you'd be profitable here. So that's only about 2,300. So now I got to ramp up more contracts. Okay, so let's just bump this up to 60 contracts and actually more. Let's go 80 contracts. So now I'm at about that 10 grand area. Now, if it pulls back and I'm right in the dead smack center, I'm at 15 grand in profit. But again, 15 grand in profitability right in the dead smack center from where I started, probably not going to happen unless it goes up, then pulls back. And that's a very unlikely scenario. So instead, you're kind of looking at, okay, well, maybe depending on this range with a calendar, I might make, 6 grand over here, 6 grand over there. So depending on where you might land, you're kind of playing this game. Now, let's say you do something different, not a non-directional trade, but actually somewhat directional. So now what I could do is actually shift this right here to a diagonal. And now I am in a diagonal and I've got a delta. So now if this thing actually starts popping, right here, you could see I can actually make a lot more. In that case, I need way less contracts. So let's go into about 50 contracts. So there we go. So if it just starts moving up a little bit, I could be at 10 grand pretty quickly, but I'm using about $38,000 of capital. So anyways, this is how you might play with these different trades to see what is it that you're trying to make. And in order for you to really construct this thing, what I would do is just start looking at, okay, well, if I make $1,000 in iron condors from Microsoft, okay, I make another $1,000 in Tesla from calendars. So again, here's your 1,000, here's another 1,000, here's your another 1,000. So you just start adding all these things up, and now, you know, iron condor, and now you've got different trades, different strategies at different durations, and you've got 1,000 here, 1,000 here, 1,000 here. So you've got these different boxes that are making you money rather than one big trade, because a lot of people try and do one big trade. You've got a ton of little trades, and maybe you need more of those trades because this could be a loss, this is a loss, and this is a loss, and this is a loss. And then at the end, you've got those making up for it. So this is how you could approach it, to saying, hey, how do I make this work? How do I aim for a target that you're shooting for? And it really is just like piecemealing it together, just like anything in your finances. If you're trying to save for a trip to Europe, it's like, okay, well, I've got $500 here, $50 there. I need to budget for a hotel. Okay. And how much money do I need to bring? So, you know, you're not bringing everything. You're not cashing out your investments. You're just budgeting how much money do you need to bring, or what kind of credit cards do you want to bring, or what kind of checks do you want to bring? You know, you're just looking at that kind of thing. How much are you going to spend on your trip? And the same thing here. Look, if I'm making 1,000 from Microsoft, 2,000 from Tesla, 1,000 from McDonald's, a little bit from Amazon, a little bit from Spotify or Twitter, some from Nvidia and Netflix, Nike, and then I'm losing from maybe 3 out of or 4 from all those, then what's your end result? So you need to be shooting maybe for 15 grand, maybe 18 grand, depending on your strategy. And then you'll lose a bit, and then you'll be at 10 grand. So calculate all those different things out. And that's where you get a little bit more of a realistic approach. It's not going to be exact till you really start trading it, but this will give you a kind of a hypothetical basis to seeing how much capital is required, what duration are you trading, how much risk are you willing to deploy. And that makes a lot more sense than just kind of saying, well, you need X amount of dollars to make, 10 grand or 5 grand or whatever the number is, because you have to take all those other things into account. So anyways, I hope that helps. Truly appreciate you sticking with me. Maybe that opens up your eyes a little bit. Maybe it's just too deep. Maybe you don't want to do the homework or think it through for yourself. That's okay. In general, you saw some of those numbers there that I showed you. So I hope that gives you some perspective. But other than that, take the time to really just play around with your own numbers and see what makes sense for you, because that will give you a much better representation than the one that I just did. And after 30 minutes to an hour, you'll get a good idea of what's required for your own personal ideas and strategies that you like, and stocks that you like to trade, and durations that you like to trade. So anyways, I hope that helps. Thank you so much for joining me. Truly appreciate it. Hope to see you in one of the live classes that I have. Check out the Traders Fly website. Subscribe if you're brand new. Grab some freebies down below, and I will see you next time.